Quite an interesting trading session today, given the fact that we managed to cling on to the intraday session highs and closed in pretty much around that. A print of 17,200 is where we shut shop the day with for the Nifty, and that's a solid gain of about 200 points that we've seen, over 1% higher. And I say unique because typically, what we've seen, at least in the week gone by or the last 10 trading sessions, is that the markets, even if they start off on a positive note, in the latter part of the trading session, we tend to give up those gains. But today was not quite the case. We actually managed to build on to where we started off in trade. Similar was the case with the broader end of the market as well. So just one bout of volatility, and then we recovered back in the green, and we've closed well in favor of the advances in today's trading session. And it's quite interesting to see that the market is completely shunned off or ignored the kind of global handover that we had from US equity markets, or for that matter, the nimble move that you had across the Asian markets, be it Japan or Hong Kong or Korea for that matter. We were actually the region outperformers in trade. Having said that, against the backdrop of the 8% fall that we've already had from the October 19 highs, it's a minuscule move that we had today. We've still got a long way to go before one can safely say that the selling in the near term in the markets has abated. But today we were firing all guns and from all corners, really. If I were to just map the sectoral flavor in the markets today, everything from automobiles to banks, to chemicals, to financials, infrastructure, media, metals, the power stocks, real estate, technology, telecom, textile, they were all holding up very firmly. It was pharmaceuticals, FMCG and cement to some degree, which were the rank underperformers in trade, although only relative at that. Pharma, yes, definitely, after the run-up that the stocks have had of late, they took a bit of a pause, rightly so. So Divi's, Cipla, DRL, along with healthcare names like a Metropolis were the laggards today, and some of the FMCG names like a Dabur and Marico. But now to the gainers, and everything from banks to large caps in all sectors were actually performing. So IndusInd Bank, for instance, surged up about 6%. You had Indiabulls Housing hold up 8.5%. RBL Bank was up 6%. Axis Bank was up 4%. There was an SBI which was up 3.25%. HDFC Bank, ICICI Bank, these were all stocks which were holding up very, very smartly. Good support coming in from large caps, also like a Reliance Industries, which was up nearly about 3% today. There were also metal names which were making a comeback, like a JSW Steel, which was up 5%. There was Adani Ports, which was up 3.6%. Tata Motors made a very solid comeback. Maruti, even though the sales actually disappointed because of the supply constraints, the stock actually bounced back quite smartly. And then, of course, TechM, along with Coal India and HDFC Life as well, were some of the rank gainers in trade. What one really needs to see in terms of the market texture from here onwards is one thing alone, as to how the FII pattern actually moves up. Do they continue to sell India equities, and do we continue to see support really coming in only from the DIIs? That is something that we need to closely monitor. So it's going to be quite curious, or in that sense, imperative to see whether or not FIIs were buyers in today's market or not, because that's going to really tell us whether the market is going to consolidate from here, or was today just a one-off dash and we continue to sell into every up move. But we will catch you again with all the trading action tomorrow morning at 8 a.m. to find out what's the next mood for the market going from here.